Welcome to the Trading Lounge, and here we're looking at the US 30, the Dow Jones, and you can see that where the market's touched on 15,000, so obviously there's going to be some sort of reaction there. How large that's going to be is a little bit unknown, but if we look at the Elliott situation as a wave 4 pullback, we'd be looking close to the 14.9, so we just really need to allow that to unfold. Tuesday for Australia is normally sort of profit taking in the morning, so we'll probably see that, and we'll get to see that on Wednesday and Thursday as well. So we should see a push higher through here, which normally occurs on the Wednesday, and then Thursday being the bear day, we'll have our 5 waves up from that point there. The S&P 500 is pretty much the same as well, except that we may already have our little 5th wave up through here at 1620, so we may see a larger correction through here. And it's a bit the same with the Nasdaq as well. The Nasdaq comp is quite close to 3,000, so you know, there's a lot of sort of resistance there as such. Same with the European markets as well. Small correction. That's just the DAX. If I just bring it here, once again, we're looking for the European markets are a little bit different in that we are looking for 5 waves up through here, and in these 5 waves, we're looking at the top of the 3rd here, the 4th back into the 80-100 here, and then a 5th wave up through here to complete that, then a larger correction from that point there. And the FTSE would be much the same as well. Yesterday we were counting 5 waves up from this low through here, the 1, the 2, and the 3, the 4, and lining this up through here with the US market. So I did have this as the top of wave 3 here, and this is 4, and this is 5, and that's possible as well, but I just thought it's probably best to count it this way and consider from this wave 2 here, the wave 1 and 2 in here, the 3, the 4, and the 5 into here, and wave 4 here in line with you know, the US markets to a degree as well. This brings us to the Australian market, which has got a slightly different wave count than all of them. What we've been doing here is we've been looking from this low here up for wave 1 and back for wave 2, but it also could be that we're taking this here from here as an A and a B and a C from here as well. So, but look, anyway, the main point that I wanted to point out is that this structure that we're looking at here, up for 1 and back for 2, and then we still have an impulse wave here as well, in terms of there's be a little 5 waves in here. So it is impulsing to the upside. However, it should have moved up further from this point. So it does appear that this is becoming a bit of a corrective pattern. And what I mean by that is that this wave 4 that we figured had in place here may not be the case in terms, it may not be complete in this term. So this ABC here may just be the A wave, and then we've got an A and a B and a C for the B wave here, and then we'll be looking at a C wave over here to make the wave 4 here as such over to this point here. And if that was the case, then we would need to be looking at this as wave 1 to here, wave 2 to here, a 3, 4, and 5 to this point. Okay, now I don't know that, and corrections are can be a little bit tricky, but this just doesn't have the right sort of look and feel about it as such. So we just got to be mindful that we can get 5 wave structure down through here before we see any further upside here. That being the case, we can see that that the market is working, you know, quite closely to our 72, the 51.75 here. So if the 51.72 became the resistance, that would be your first like awareness of weakness. So then the lower level, the 51.65, is where you could start shorting from on the retest, because you can see how this has got a move up here. That can be counted as 1, 2, 3, back for 4 and up for 5. If that's the case, then it's more positive on that side, will be going up. But if this starts to come down through here and starts to overlap that overlap this little high just here, which would be 51.69. So I move down into the next level here, the 65, just about there. You could see that if that became the retested resistance, then that would make that a three-wave structure there, and then that would be a bearish connotation from that point there. So you could run with that. Right, and I'll just before I go there, this is the cash market, the ASX 200 here, and yesterday, yes, we closed higher than the previous day, but you could see by the bar that we had here is that the sellers are in control here at the 5200. So, in one way or another, the way to sort of view this in the first instance, I guess, is that this would definitely be up for like 1 and 2 here, an A and a B and a C, but and this is being the third wave here. So we've got either the top of the third wave here, or we've got the top of the third wave here. So there's some sort of correction that's sort of unfolding through here. And once it's finished, then we can look for another 5 waves up. But we also shouldn't look too far up as well, because if this is the extension here in wave 3 here, then that makes wave 1 here and wave 5 here about the same in terms of time and distance and size and so forth. So look, we're just caught up in this little corrective structure here, and it may not be finished until Thursday. Right, so let's have a look at commodities. Okay, starting with the oil market here, we've just touched on this trend line through here, just above the 97, just above the 97 there. So that's where the resistance is coming from at that point there, to understand that. What we have been looking for is we've been looking for, I'm counting the structure up to the upside in terms of the A, the B and the C up through here, which really is a retest of the 100 here. That's what's really going on here, and especially after the retest of 90 here. So what we're looking for here is we're trying to count 5 waves up through to here for the C wave, and that seems to be in place now. So this market can work lower from this point through here, okay? But I wouldn't call that in until the 95 became the retested resistance. That's the psychological point of support there, and you can see that by this bar coming down and moving back up through there. So in this particular case, this bounce off here, and a market coming down into this area here would have a bounce, and it just bounces back to the closest largest number, in this case here. So in terms of Elliott, we could see this move further down. In terms of trading, however, which is always a different story, if the 95 become the retested resistance, you can short from there. In fact, if the 72 here became the retested resistance, you could pick up a position from that point as well. If, however, the 96 becomes the support here, then you would use the 96 and all of group 1 here to build a position into the long side. And if the 96.30 became the support, then you would see it push above the 96.50. The 96.50 is a very important level. It's only subtle, but it's always seems to be a turning point for oil. I call it the 65 number, because the 96.50, the 6 and the 5, it's just the way it is, I guess. I don't know, but there you go. So this does seem to be a bit of an impulse wave up through here. So it's just a matter of degrees, really. So if the 96 becomes support, then look for the long. If the 72 becomes the resistance next time around, then you look for the short. But in the bigger picture, to see a further price movement down back towards the 90, then the 95 has got to become the retested resistance. So it just depends on your degree of structure in terms of trading. The copper market, there's no real change here, really. Obviously we've got this third wave up through here. It does seem to be a bit of a triangle pattern through here as the 4th wave, and we should see a 5th wave a little bit higher up through here as well before we see the larger correctional pattern complete itself in terms of the A, the B in 3 waves, and the C in 5 waves up through here. So once that occurs and starts rolling over, then we'll obviously see the material sector pretty much do the same as well. So yeah, at least you know what to expect there. The gold and silver market, a lot of change here. Basically, we're searching for a top. We may have a top in here, but because of this positive wave structure sort of here, then we still need to expect another retest into the 1500 here. Now, in saying that, we've had that sharp move down through here, and then we've had a little retest back of supply up through here. So in group 2 here, the 65, 72 and the 80, that should be up a little bit higher there. So if while the market's in group 2 here, it's supported, if it drops out this time round, then it's a sign of weakness. Technically, we wouldn't have a bearish picture here until this low here at 140. 144 was taken out, but the trading the levels down, the 1450 is what you'd be looking at here, becoming the retested resistance to pick up the short here. So any move down here would be considered weakness. If we can just get a smaller picture of that here, okay, just having a look at that. Just a 5-minute chart. See, the current move down here so far is not impulsive. It's still corrective. We just don't have that larger 5 waves down. But what I can see here is I can see that, and you can see as well, is that the market's falling pretty quickly through here, and it's slower to go up, isn't it? It's dropping quickly, and moving back up slower. So that just tells me that there's sellers in the market. So the 1472 here is the level that would be looking for as a retest here. If you're trading intraday, then you'll be looking to sort of short into that area there. But I would sort of use where we are now. I would use this number here, the 8 here. If the 8 become the retested resistance, then look to glean a small short position there. And then, of course, at the 65 as well, you can pick up one there, and then one under the midpoint, the 50 as well. If the 1472 becomes the support up through here, then you'd go along from that point there and look at heading up to the 1500 from that point. Let's just have a look at the silver as well. I mean, the silver's in the same boat as well. So in both of them, the silver's got a better corrective looking pattern really. So in terms of the whole move down through here, we were looking for an A and a B and a C. We thought we may have the top in there as it rolled over, but we only got an A and a B and a C back in here. So we had to call this the A wave up through here, all of this, A, B, C for the A. So we know it's corrective. It's not an impulse wave. And then we've got the A, B, C here, and then we know that we'll get 5 waves for the C wave. Now, we do have 5 waves here, but it's really a bit small, so it's more likely that we should be getting something like, where are we here? This one here. So if that's 5 waves there, we should get an A, B, C back, a 3rd wave, 4th, and a 5th. That's what we should be getting, And then the length of this here from this high to this high here, this length here, should be the length of the C wave here. So it's kind of important that if this is 5 waves up here for wave 1, and this is an A and a B and a C back through here, then it really should stay above this trend line through here, and also the 61.8 retracement level as well. So, whoops, wrong one. So if 2350, I guess. So look, if the 2350 became the retested resistance, then we've obviously got a short in our midst from that point there. So because that would be below the 61.8 retracement level of wave 1 here. So you just got to give it more time to unfold. It's not a lot we can do about it. So just the way the cookie crumbles. Okay, that's copper, gold, silver. That's done. Let's have a look at Okay, starting with the US dollar, we've been tracking this this A wave, B wave, and C wave, a corrected three-wave structure. And once that's completed, we should see further upside. And we feel that that may be completed now because of this particular structure through here. You can kind of see that it's got the 1, the 2, the strong third wave, the fourth and the fifth here for wave 1. Then we've got the A, the B unfolding now, and then the C wave in 5 waves unfolding through here. Just see if I've got that, was working with that here somewhere. Let's just check that out. Here we go. So just in a bit more detail, we've got up for 1 here, back for 2 here, the 3, the 4, and the 5 to here, then the A wave, the B wave that's unfolding now. Don't worry about that little guy there. And the B wave is normally in 3 waves, so it's an A and a B and a C wave, and a C wave's always in 5 waves as well, so that's there. So we should see this fold back down into this particular trend line through here, retesting into the 82 area here, the 61.8 retracement level through here. This is important if you're trading the euro and other pairs as well, so that's what we're looking at. The 61.8 is down through here, but I feel that the 82 and this testing through here was quite firm, so there will be buyers sitting here, so it shouldn't really come down much more than the 82 through here and the trend line and volume support and so forth. So the A wave being sharp, the C wave should be a bit more lazy coming back through here. So once that sort of kicks in back in 5 little waves through here, then we can expect that to move off quite strongly to the upside. And what that will do will obviously push the euro to the downside as well, and also place a bit of pressure on the commodities as well. The top of the copper in the C wave for the copper, for instance, and also the gold and so forth, stocks, indices. So yeah, that's something that we'll be keen to be looking at this week. Small but significant. On the flip side of that, we've got the euro here. This is just the 5-minute chart through here. As you know, we're basically looking for a larger wave 2 to be completed. Now, that may be completed. Just let me find this for a sec. Okay, so look, as you know, we've been looking for wave 2 to come into play. That we're just not quite sure if that was actually wave 2 here, or we've got one more push to the upside through here. And it's still a little bit like that. But in explaining the US dollar just then, the bias is starting to put this wave 2 into place here. Obviously the 130 is the support here, and we'd need to see that as resistance, and also a real clean sort of 5-wave structure to the downside, and we can take it from there and look to short from that point there. Now, these moves that are occurring down here are reasonably quite bearish, as we're just sort of looking at on this 5-minute chart through here. So in terms of it's likely that this particular structure here is not finished yet. Okay, so this would be like the wave 1, the wave 2, and the wave 3 coming through here. So this is a likely wave 4 pulling back up to the 30-40%, and then moving down through here. So you'll take the 1030.72 here as the retested resistance to look for short trades there. That would give you the first bias to short. Obviously, adding under here. There's going to be bounces always bounces at 30 and always bounces at 50 as well. So it's a bit tricky to navigate, but it's got that 1, 2, 3, 4, and 5 down to there. But that still doesn't give it. It only gives us. Doesn't still quite give it to us in terms of the larger picture, because we've got this move up here, which would be either wave 1 or the A wave, wave 2 or the B wave, and then 5 waves here for the C wave or wave 3 here. So we still wouldn't know if we've got a larger 5 waves in terms of 1, 2, 3, 4, and then 5 into this area here, where we would get an A and a B and a C bounce, and then down from there. So we've still got a way to go before we can put in some short trades to really enter into that stronger wave 3 to the downside. So it just takes a little bit of time. It's tricky as well. So getting the timing right. So in looking at the structure, we're basically looking for the 1, the 2, the 3, the 4, and the 5. If we can identify that, then we'll get the A, the B, and the C back up, and then we'll get the next move down, which would be, you know, the third wave 1, wave 2 of the third wave of the next larger third wave as well. So it would move down quite swiftly from that point there. The other point to be made as well is that the euro and the US indices are normally traveling together. There's some sort of correlation there, so they wouldn't be correlated. So that's you know, that's a bit of a bit tricky business, that one. So it's just nicer when markets that are supposed to be correlated are correlated, and if they're not, they're just warning signs that either the indices are wrong or the currencies are wrong in one way or another. I mean, they're always right because they are, you know. Anyway, it's just that. But look, anyway, we've got time before we can, you know, settle into this particular trade. We've got a better trade in the Australian dollar, which is here. So as you know, we've been looking for an A and a B and a C wave back up here, and we're looking at the little 5-wave structure for the C wave, and she's unfolded quite nicely down through here. Now we can have this move down through here is a nice impulse wave. It's impulsive. It can be counted as down for wave 1 here, and then coming back for wave 2 here, which would come into the 102.72 area here, and then move down from that. So one way or another, you can look for short trades into this area through here. The thing today is that, well, we've got trade balances coming out, but more importantly, we've got the RBA rate announcement at 2:30. And I thought it was unusual, well, it is unusual that, you know, we didn't run further up here. So it made it a bit tricky for, you know, I understood that we had an ABC here, but I felt that the RBA rates announcement would continue this to be pushing higher through here, but it wasn't the case. The ABC held very nicely, and now we've got an impulse wave here, but we've still got the same situation. You know, will it rally for the rate announcement or not? So if it is going to be the case, if this is going to be wave 1 here, then wave 2 we can look in here. So you can look to short at 65 and 72 area here, but the net rate announcement could just put it out of whack a little bit, you know. So realistically, technically, you would need stops above the 103.20 up here, but that's such a long way away. So. But just on an intraday basis, a bit further there, that on a 5-minute chart rather, coming from the top here, this is how I've got it counted. So we've got a clean sort of 5 waves down for wave 1 here, a corrective 3-wave price action for wave 2 here, and then we're going down from wave 2 here all the way down to wave 3, which will be down here. And in doing that, we've got wave 1 of the next smaller degree, the A, the B, and the C for wave 2 here, and then we've got wave 3 here, wave 4, and wave 5 here, okay, for wave 3 here, okay. So when wave 3 rallies into wave 4 here, if I just remove this here, this will just remove a bit of confusion. So normally the wave 4 here rally would come back to the wave 4 1 lesser degree here. Okay, so that's where that would come into play here. But because we got the rates announcement, then it makes it a little bit tricky. So we'll be looking at. This is a wave 4 into this area here somewhere, and then we'll be looking for wave 5 down into 102 here. Then we'll get the ABC bounce. Now this count is a little bit different from the count that I just mentioned just a moment ago with wherever that was. Just bear with me. This one here of actually being wave 1 low here, and this is also valid as well. It's valid because the rally that we have for the RBA rates would bring us higher into this area through here if that was going to be the case through here, and also the 61.8 retracement level from here to here brings us right in at the 102.72 area through here. But look, either way, you know, we need to look for shorts up through here. I just don't know how the announcement's going to go. If this drifts down during the day through to here, as such, then that from that point there, no higher than this one here, say the 102.60, then you'll know that wave 1 is actually here, and then we'll be looking for wave 2 to come back to somewhere up here as well. So look, there is short positions to be had here, and we'll be looking further to the downside, down into the the $1 area through here, as we were looking through up here. So sometimes it's best not to get it too perfect, but get it sort of reasonably right, and as it sort of does trend, then look to use the levels to add at that point there. So alrighty, so as it goes, we'll look for a short at the 102.65, 102.72 there. With stops above the 230 rally high, if there is a rally high for the RBA rates as well. So wherever that comes in, that's where the stop's got to be. Alrighty, well, that's it, I think. So Tuesday's normally sort of profit taking in the morning, and then the trend normally sort of shapens up and firms up and continues its uptrend. And Wednesday's pretty much the same, a bit of a V-shaped day with a higher close on the Wednesday, and then the bear day on the Thursday for indices in Australia, stocks in Australia. Alrighty, well, good morning and good luck.